So yeah, about that quick run through of the different indicators. This is Bitcoin without any uh, mm, charting tools. Let's move into something a little bit more long term, so that the chart is more stable. Uh, 4 hour, yeah, 4 hour is fine. So let's remove all this and add the indicators one by one. So the first one was RSI. So RSI is a pretty simple indicator. It has two components. It's one is the RSI, and the other is the MA, for which we are using the SMA of 14 and 2 standard deviation. And these are the charting two techniques that are used. So RSI is the purple line, and the RSI based MA, which is the yellow line. Uh, so this is the actual purple line is the actual RSI at that at any point of time. So for the 4 hour Bitcoin right now, the RSI is if you if you remove that, you would see it here in this mark, which is at 66 at the moment. But yesterday, on Friday, it was at 90 almost, or 85 or something. And generally in the market, other market context and dollar and other stabler things, stocks and all that, RSI above 70 is known as overbought. But for Bitcoin, that kind of activates its price action. You can see also here that as soon as it got beyond the 70 mark, that rally got activated. Here again, it kind of did the same. Here again, it kind of did the same. So uh, uh, in crypto, there is this tendency of overextending when something is entering overbought zone, uh, and tap that momentum, high momentum, which is found from the RSI itself. So crossover above 60 in Bitcoin is very uh, well looked after. Uh, in other case, yeah, like RSI on the lower side is generally also found as kind of a bearish thing, and then when it reaches below 30, it kind of is oversold in general market context. But sometime, like I said, on the opposite side, so that doesn't translate to the downside too much. But yeah, generally that 30 and 70 mark are the overbought and oversold and overbought mark respectively. And when the prices are outside that zone, people tend to be cautious about their trading approach. But in Bitcoin or other cryptos, that concept might be a little different. So if we look at something else, which is let's say look at the MACD, it's kind of a uh, similar thing, but it's based on the convergence and divergence of the moving averages. So here our fast length is 12 and slow length is 26. It is the basic structure that everyone uses. So oscillator MA type, we are using EMA. A lot of people use SMA, but EMA is it works better with the smoothing factor, in my opinion. At least that's how I've used it for as long as I've been using it. So it's similar. The histogram is an indication of the where the prices are, where the movements are, and the MACD is the blue line, and the signal line is the slightly orangish line. So and zero is the middle where the histogram changes. So we in essence, MACD signals are when the MACD line is crossing over the signal line, like here, like in this case, here and here and in this area, again in this area. So some of them are working, some of them are not. That's how any strategy does. In this type of thing. So this is MA, so it might be inaccurate a lot of times. So accuracy of this depends on the situation and different kind of metrics that come with it. So if we are only using this as the core indicator, we better be keeping our stop losses close, our risk, setting our risk reward very cautiously, and other things as well. But generally speaking, yeah, it's a pretty good indicator to see where the prices are trendy. This green, deep green MACD histogram means you have a very strong trend at the moment, and when it turns into slightly paler green, it means the trend is slowing, and when it turns to the red zone, it means kind of a change in direction of the market. So yeah, like we are seeing at the moment right now, MACD is way above extended at almost 900 or the 1000 level, and is having a crossover cross below, and the histogram is also changing slightly from the like pale green to red at the moment, which can be an indication of bearishness in the price. So we better be careful and be cautious as the prices can be fickle as well. In any case, it's a pretty simple oscillator as well. So crossover here, crossover on the other side, and histogram change. It's a pretty simple thing to follow, and a very good place to start the technical uh, overview of any asset at any point of time. So apart from this, we also talked about stochastic RSI. So stochastic RSI is this one. So it has also two components, and it's the RSI length and stochastic length. So these are the important, and K and D, these are the mm, input frames. So the K and D are more important in the context is the in oscillation. So uh, yeah, so the K percent K uh, is the current price from a percentage view difference between the highest and the lowest point at any point any period of time. So for 4 hour stochastic RSI, the percent the K is the percentage of difference between the previous 4 hours of the price's highest point and lowest point uh, difference, and the percent D is the moving average of that percent K value, percent K line. So uh, uh, and that period is in this case, what from what we are using is 14. So that's important, and because this is set in three, K and D are set in three. For 4 hour chart, that K and D are 12, are seeing the 12 data for 12 hours. So uh, that's important to remember as well. And the stochastic length is 4, RSI length is 4, RSI 14 we already talked about. RSI set is set as 14 normal in every case, and we are also using that here as well. So how it works is these two lines. So let's zoom it out. So generally people see this as an overbought situation, and then this as an oversold situation, and these crossover can be traded, and a lot of people do, but selling at a higher cross below is preferred, and buying at a lower cross above is preferred by many. So that is something quite important to remember as well. So it can generate good signals over a long period of times as well. If we look at how good the daily signal was on the stochastic RSI, the crossover happened on the 24th of January, 24th of January at 40,000. So since then, the price went 25% up, and that's a pretty good signal. But like I said, the cross down happened at this point, uh, and it was only at 43,000. Then again, cross out happened here, so that's a separate kind of trade again that happened on the 6th of February, which is a follow through trade and would be difficult to trade given where the stochastic RSI was at that point. In any case, yeah, it's something to look at, which draws interest from a lot of people as well, and can be a very good indicator to look at in any case. Other than that, what was there? What else was there? I think there was something else. Yeah, VWAP. So the VWAP is a volume based indicator. So if we see the auto anchored VWAP, sorry, it's not working for some reason. Yeah, so this is the VWAP. Let's change the upper band, lower band. We don't need it, and change the inputs uh, to weekly, and look at the 4-hour data. So this is something we can also look at, and it is generally a good indication uh, for price, like monitoring of the price action as well. There are other view app indicators as well here, and those can be as useful. I think, yeah, this is also one, but it's not working at the moment for some reason. I'd get back to it and let you know later as well. So I think, yeah, we pretty much covered everything, and that UF is looking at the data from 1 week period from a 1 week point of view, and because the multiplier is one, it's looking at only 1 week. Uh, so that's why it's pretty close to the price as well. So we can change the band multiplier to 2 or something. It will automatically adjust accordingly. Or look at the monthly UAP, it would be different dynamic altogether. In any case, it's a good indicator to follow, and something to always be keeping track of as well. Uh, Let me know if there is anything else, and I'll get back to you on that.